Welcome back to another video. We're going to do a super short and simple breakdown of Alibaba stock and Amazon stock to figure out which one of these two is the better buy while they're both in a pullback and have Q4 earnings. So let's talk about that. But this is coming off of a $20,000 week for my portfolio. As you guys can see, here's my weekly chart with a ton of massive gainers. One of the highlights from this week being the SNDQ short position that I took. So a short on SanDisk, which fell off a cliff on Thursday and Wednesday. So I was able to make 52% in 2 market days after alerting. So insane returns. I did not risk much to make $1,150, but we also had that $4,000 gainer on the Pfizer V options that went up 400+%, and we had like 20 other bangers. So great week. The portfolio is almost $500,000. Let's check out these stocks. So number one is Alibaba, number two is Amazon, and what I've done here is showed you guys so we can basically speed run this, what it would have looked like if you bought the dip for Q4 on both Alibaba and Amazon. Now, let's first start off showing the potential upside according to analysts. For Alibaba, the minimum price target is 70%. Absolutely absurd. That might be the highest minimum price target I've ever seen for a large cap stock. So I want to touch on that because I don't know if that's 100%, realistic. And then their average is 100%. So crazy. This looks almost too good to be true. Maybe it does look too good to be true. Also a strong buy pretty much all across the board. Then for Amazon, also super strong buy. We have 60 analysts calling it a strong buy, not just a buy. Then we got 11 calling it a buy, none calling it a sell, strong sell, and 2 calling it a hold. That's absurd. That's even better than Alibaba here. And then for the upside, average 30% with a minimum of actually below the current price. So according to analysts, Alibaba is the better buy. But let's look at just what we've seen in the last few years from this stock. It's done well. It's had massive moves to the upside. I remember this big move. I had a little bit of FOMO because it was the last time we had Q4 earnings and it pumped. But let's look at how it's performed in the last earnings. So if you bought Q4 back here, and we're talking about basically a swing trade, not something that you're holding for too long, you would have made a ton of money. You're basically buying at the price that it's at now, and it went from $80 all the way up to $200 per share. So that's absurd. That's like a 200% gain. And then if you bought the Q4 before that, you would also have made a good amount of money. You would have outperformed the S&P 500's average. So it went from 68 all the way up to 82 or 83, and that's on the absolute low end. You could have sold earlier for almost 100% gain. Again, if you bought Q4 on the dip before that, you would have made money. $60 turned into 113, almost 100%. So you might be thinking, well, if this has such a high win rate for buying the Q4 dip, why isn't the stock already up? Because clearly they report just massive revenue for Q4. Why isn't the stock already up? Well, right now it's seeing a lot of selling pressure because the Chinese index is down so much, whereas Amazon is actually not down too much, but it is in a pullback for sure. Because this was just a $300 stock, now it's at 242, but it was, literally last week 226. So I would love to buy Amazon very, very soon. I would love to buy Alibaba maybe even now, but let's keep going here because it's not all sunshine and rainbows. Because if you bought the Q4 before that, you would have lost money. And that's because the market was not happy during this year. So this is a kind of, I guess, standout where the market was just tanking, especially the Chinese index. So this is kind of an outlier, but still we have to factor in it's not a 100% win rate. So if you bought Q4, you would have paid $100 per share, and 1 year later, it would have been at 63. So you would have lost money for the first time in 4 quarters. Let's go one back. You would have lost money again. This time, a lot of money. 50%, right? So it's not a 100% win rate, but most of the time, if we go right back to the one before, $163 turned into $300. The quarter before that, 124 turned into $164, right? And then the one before that, you would have lost money, and before that, you would have made an absurd amount of money, 81 turning into 161. So there's a lot of 100% moves. What you'll notice is pretty much every single year consistently from Q4 to Q4, the price has either gone up 100% or down 50%. And now we're in a downtrend, a very big downtrend. So where is the stock most likely supposed to go just from what we've seen in this chart from these prices at around the 80 to 90 range? Well, just historically, I would expect something like what analysts are expecting, which could be up to 100% gain. Maybe not 96 all the way up to 180. Maybe it dips a little bit. We buy at like 90 and we sell at 140, 150 even. Something where it's not absolutely absurd and we don't have to hold for so long. But these moves happen quickly. We had to move from 100 to $200 in literally just 3 months. So there are definitely opportunities with Alibaba here, and I am looking to buy before earnings. If we go to Amazon, it's a little bit of a different story, where we actually, in the very beginning, it was just a buy, 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 obviously. We all know how Amazon has done recently, but it's really slowed down. Like if you bought in the last Q4, you would be break even all the way to now. So basically 2 whole years you would have been break even. But before that, almost every Q4 was a buy. So just historically, you would have made a ton of money. Look at this. This is straight Q4 up, Q4 up, Q4 up, etc. You had one time where the market pulled back. Same thing with Alibaba. It was about the same time. I remember this. I was trading this. I was able to buy some Amazon at 80 bucks, and obviously that made me a ton of money. Now $80 on Amazon is unheard of. So for Amazon, the reason I'm actually going to put it below the Alibaba for at least this Q4 is just because it's already recovered a good bit. If it can dip to $200 or below, I will buy very heavily before Q4, which is possible. It just needs to go down maybe 10%, 20%. All we need is one very red week, and then I will make a very big entry into Amazon. But considering Alibaba has already pulled back to the point where I think it makes sense based off the moves we've seen before, I would put Alibaba. So Amazon might be more consistent, but Alibaba historically has had bigger runs. And right now, where the stock price is, we could make more money. So if you have any questions on what I went over or any positions, comment trade in the comments below and comment your question as well. If you comment trade, I'm going to message you the full list of stocks I'm buying. In the meantime, guys, join the community, subscribe. I'll be posting updates every day, and have a great night.